What do all investors and traders want from their method? Above all else, consistency. When there's consistency, it builds confidence, and with confidence, placing trades become a professional decision, not an emotional gamble. That's what Master Trader Technical Strategies is designed to do. We combine proven technical concepts into one clear trading plan. When they line up, the odds are in our favor. The foundation is simple: trend, support, and resistance. How do we do it? Well, many traders clutter up their charts with indicators, fib lines, trend lines. They hope to find the answer, the holy grail, and it builds on stochastics and MACDs and so on and so forth. It's unnecessary noise. The truth is, it's right on your chart for everybody to see. You don't need any proprietary indicators, but you have indicators like this, Ichikumi clouds, and you could add a whole lot of other stuff on there. You try and figure out where support and resistance is and whether the trend is up, down, or sideways. It's really a lot simpler than this. Let's take a look. So it all starts with a pivot. You might say, well, what's a pivot? And you can see we identify that with a pivot high being three lower highs on each side, and that creates resistance. Why three? I've looked at 3, 4, 5, 6, 10, 1, and 3 just seems to work just right. There is no perfection, but this works well. Pivot low, a bar with 3 higher lows on each side, and it creates support. Some support of some significance because prices went down, they pivoted, and they went back up again. We don't know it's going to be a pivot low until we get the 3 bars to the right. And if there's only 1 bar to the left, then it's just not a pivot, plain and simple. Now, once it pivots, it creates an area of support with a pivot low, and it pushes up and pulls back 3 bars to the right, 3 bars to the left. It creates a pivot high. What we do know is that a prior pivot low, there's going to be buyers. They were there before. And at the pivot high, there's going to be sellers. And if they have multiple pivot highs and pivot lows in opposition of each other, simple, it forms a trading range. Things are range bound and unlikely to move out of it until it's obvious that it's either broken out or broken down. Again, pretty simple. Once it begins to form a pivot and we get a retest and it closes above the pivot high, we say it's broken out. There's been a retest and it moved up. It created a higher level of, and at that point, we look at where's the next pivot high up above. That's where it's likely to go. So let's look at an example. So here we've got the equal weighted NASDAQ 100. This is a recommendation in Master Trader ETF letter. And we picked this, you may have noticed, the few stock moving the markets and a lot of underperformers. And this began to shape up and create a rounding bottom. What's a rounding bottom? It's where pivots begin to congregate and then begin to make higher lows. And you can see these green dots there mark a pivot low, and up above there was a pivot high. As it pulled back and violated that pivot low, at that point we think maybe it can go. It began to improve. And once it formed that pivot low, we assume that there's going to be buyers in that same area. And prices pushed up to the pivot high. There's going to be sellers. And then it pulled back again. And then it begins to retrace again. And all of these bars, that's what begins to form that rounding bottom. And a rounding bottom displays that there is accumulation going on. The move down created uncertainty. The pivot low creates support. More pivot lows, additional support. And then as prices begin to move up again, we see the rounding bottom to begin to form. And at that point, you could say, I will buy the breakout above the pivot highs. And that's what we recommended. Pulls back, makes a higher pivot low in an area which was resistance, becomes support. More simple stuff. And prices push up. And you can see on that last trading day, prices were rejected. It's just one red bar, what we call a topping tail bar. It's not a big deal. Will it make another higher pivot low and make a higher high? We'd assume so, because it's got a rounding bottom and now it's trending up. Of course, that's the unknown, and that's the harder part of trading. And we just assume that a trend, once it is in place, will continue until it stops. Let's look at one more. So here is one that we were looking at as it was making this smaller rounding bottom. The process is the same. Let's back up for a second. It was looking great. This is fast and L. It was up near the highs. It formed a pivot high. It tried to retest it. It failed, but it was still in an uptrend. Pivot low after 3 bars to the right. We assume buyers are going to show up. We don't know if they will. It could have broken down, but it formed 3 more bars to the right and another pivot, a retest and reversal. So now it's forming this rounding bottom. The assumption was it would go up and potentially take out that high. Something's going on with this stock, creating some uncertainty. We continue to use the method, looking to the left. There's 2 pivot lows. That's a stronger area. And then we got a big wide range bar here. So we don't really have anything to do but to wait for another bar to continue to create this bottoming process and see if it could break out. We'll see if it can do that in the coming day. I'm watching this to see if it does, or if it breaks down below the low, that would suggest that it's going to continue to go lower. This is the beginning of a foundational process of building a trading plan. I'm going to be talking a lot more about this in a big presentation on Wednesday. Well, it starts tomorrow, but I'm going to be speaking on Wednesday. But to register, go to mastertrader.com/MTU. Enjoy the whole presentation. Know you're going to learn a lot, and you'll build your trading plan.